Hey, you guys like my new background here? Yeah, no, it's all fake. You can see like how it's messed up. Anyway, hey, we're gonna be doing chapter 2 homework here, so let's go ahead. I'm gonna share my screen and we will jump right into it. Okay, you're gonna see this in your mode. You're gonna see this student mode. Let's go over here. We're gonna click down here and go to problem assignment. If you haven't figured out by now, problem assignment slash homework assignment, I might even use them synonymously. Uh, it's the same thing. Click begin. Let's close this other screen on my other website. All right, so as it decides to get moving on, remember you're going to click begin or continue, excuse me. We got some multiple choice questions. I leave those to you. Let's see if we can find our problem assignments. 5, 6. All right, here we go. So remember in this course, we were determining what the normal balances of accounts were, debits and credits. So fuel expense, what type of account is? That should be the first question. And then we ask, once we determine what the type of account it is, we want to be able to say what is its normal balance, what increases that account, a debit or credit. So fuel expense, and remember this in accounting, we don't make up creative names for these things. If it says fuel expense and that's it, we know it's an expense. So it's definitely an expense account, and so we're going to know that that is going to be a debit. Okay, so we're going to put debit. Furniture is also an asset. Okay, we know that because it's furniture, it's something you sit on, something that you can sell. So we're going to go ahead, not asset. We're going to put that its normal balance is a debit because that's what makes an asset increase. Okay, rent revenue. Again, if it doesn't say unearned or some other thing that qualifies that revenue, it doesn't say unearned. So we're going to say, all right, it's rent revenue. It's revenue we're getting. So the normal balance of what makes it increase is going to be a credit. Okay, so let's go ahead and just choose credit. And I'll do one more here. Let's do salaries payable. Okay, payable is the buzzword there. We know it's a liability. A liability's normal balance is a credit. That's what makes it go up. So we're going to choose credit there. Okay, let's check our work again real quick. All right, it's not complete, but all the ones we did answer were correct. So I'm going to leave the rest to you to complete that. Now we're going to look at it from the opposite direction. We're going to look at it whether it increases or decreases the account. Excuse me, whether it decreases the account with a debit or credit. So if equipment is an asset still, okay, it's an asset, and what increases or what its normal balance is a debit, then what will decrease it? Well, in this case, it's going to be a credit. Is going to decrease that. Let's go to salaries payable and what decreases a salaries payable. Salaries payable is a liability. Its normal balance is a credit, so it will decrease it will be a debit. Let's check our work there. All right, correct but not complete. I'll leave the rest to you there. Let's go to this one. Okay, so all these numbers are going to be changing for you in this. We're basically doing basic financial accounting transactions. So let's start off with this. T. James, funny enough, my son's name is Tyler James. So he owns, he invested 14,500 in his company. Okay. And we're going to look at all these transactions. They're all going to be restated down here. So we don't need to keep scrolling back up here. T. James owner invested $14,500 cash in sustained company. First thing we do is we analyze it. Do we need to make a transaction? Do we need to do a journal entry? Yes. Okay. It involves that. Okay. How does this impact our accounting equation? All right. So we're seeing that the owner is investing cash into the company. So cash is going to go up, and so is owner equity. Okay. So what makes cash go up? What type of account is it? An asset. What is its normal balance and makes it increase? A debit. So we're going to debit our cash first for that 14,500, and then we're going to credit the owner's capital. Okay. So it's going to be T. James capital, and we're crediting that because that's its normal balance on a capital account. All right, so let's go to the next journal entry here. The company purchased $7,500 of furniture made from reclaimed wood on credit. So we purchased $7,500 furniture made from reclaimed wood. We don't care. I mean, we care for the environment, all that stuff. But in accounting, we don't care if it was made from reclaimed wood, pre-processed wood, pre-treated wood, brand new wood, wood from a gopher. We don't care. All we care about is what is it? It's an asset. Furniture is an asset. Okay. So we're going to debit our furniture account for 7,500, and then we're going to credit what? Well, we bought it on credit, meaning we owe somebody money. So we're going to put it into accounts payable because it is our vendor that we bought it from. That concludes that one. The company paid $1,300 cash for a 12-month prepaid insurance policy on the reclaimed furniture. All right, so basically, we wanted this furniture to be insured for 12 months. So remember, we're not expensing this because we haven't used it yet. We're buying it for 12 months going forward. So what we're going to do is we're going to debit prepaid insurance expense is what we're going to deal with. That is an asset, not an expense yet because we haven't used it. We're prepaying it. So we're going to go prepaid insurance for $1,300, and then we're going to credit our cash. Sorry, it took me a second to think about that. Oh, I have caps lock on. Okay, we're going to credit cash for $1,300 because we're giving cash out. Company billed a customer $6,500 for sustainability services provided. All right, so what's happening here? We bill a customer. We did the work. Our revenue increases. We billed it to them. We didn't receive cash, so they owe it to us. So our accounts receivable is going to go up. Accounts receivables are asset, so we're going to go ahead and go accounts receivable. If you're ever doing this by hand, I always put A/R. It just saves me time and effort. And then we're going to, let's see what revenue accounts we have available. Service revenue, services provided, so we'll use service revenue. Oh, the other one was unearned anyway. Okay. So our service revenues are credit because the revenues is normal balance as a credit, and we're increasing our revenues. Company paid $7,500 cash towards the payable from June 2nd furniture. All right, so what we're going to do here is now we're paying the cash out to pay off what we owe. Was it the full amount? I don't think it was. Maybe it was. Yeah, it was the full amount. It doesn't necessarily matter. We just want to make sure we don't overpay. So what we're going to do is, because we're paying it out, our assets going to go down because cash is decreasing, but so is our liability. We no longer owe that money to that person. So we're going to, what's the normal balance on a liability account? A credit that it increases it. And since it's going to go down, we need to debit that liability. So we're going to say accounts payable is a debit for that $7,500, and we're going to credit cash. We've done this before to see money go out of the company. Let's see the next one. The company collected cash for service billed. Okay, I'm going to let you do that one. T. James invested an additional $13,500. Okay, I'm going to let you do that one because that's basically the same one as number one. Company received $8,500 cash in advance for providing sustainability. Okay, let's do this last one, and then I'll. I don't want to do all of these for you just because obviously then you guys are just basically, copying what I do and everything. So I want you to be able to apply what you're learning. The company received $8,500 cash in advance for providing sustainability services to a customer. Okay, we're going to do that later on. So we haven't earned this money, all right? But we did get cash. So our cash is our debit because its cash is going up. Its assets, normal balance is a debit. But what we're getting is we're getting unearned revenue, okay? Because this money hasn't been earned yet. It's a liability. So what increases the liability? It's going to be a credit. Credit is what increases liabilities. So let's check all these journal entries we've done already and see how we've done, okay? So all of the ones we've done are correct, all right? So we've done them all correct. I will leave it to you to finish that one up. And then let's come over here and we're going to do journal entries here. We are going to do T accounts, and then we are going to do a trial balance, okay? Maybe what I should have done was just done all of these so that I could transfer everything over here. And, oh well, okay. So Brooks invested $155,000 cash along with $30,000 in office equipment to the company. Well, let's do that. We're going to journalize our journal entry here. So let's go ahead and do that. And we're going to invest cash. Cash is a debit. Oops, we want to make sure we select the correct one. Otherwise, it'll yell at us sometimes. Okay, oops, I missed a 5. And then we also increased our office equipment because office equipment is being invested in. So this is one of those complex journal entries where we're going to have more than just 2 accounts. Sometimes these happens. And then it's going to be Brooks Capital. And we need to add all of this up, $185,000, okay? So what we've done is, I said in the other journal entries, I'm not going to spend a whole lot of time because you should have picked that up in those ones. We've debited cash and office equipment because they're assets. Normal balance on an asset is a debit, and so we're increasing it, so we're going to debit it. And then D. Brooks Capital is an equity account. We're increasing equity, so we're going to credit that account. Now, you can do this one of two ways, all right? You can go through and do all these journal entries, or you can do it like this. Once you're done with this one, come over to requirement 2. Okay, your date was March 1st, and you dealt with cash. So let's put in here March 1st. And you debited cash, the $155,000. And then we had office equipment for $30,000 for the same date. Office equipment, just go around, find, here it is, office equipment. March 1st, we debited it for $30,000. And then we're going to come to D. Brooks Capital, and we're going to debit it, or excuse me, we're going to credit it on March 1st for the total, I think it was 185,000, I think. It was, yeah, 185,000. So you can do that as you go, or you can wait and do after you've done all the journal entries. Really nothing, there's nothing right or wrong about either method. It's just a matter of preference. I like to, I've done it both ways. I don't know that I have one that I actually like to do. So, but that's how you do it. That's how you take these general journal information and then you translate it to these T accounts, okay? What we're going to do after that is we're going to make a trial balance, okay? So we're going to come over here, and I'm not going to do this whole trial balance for you, but basically you can Google a trial balance if you want. You can do that. But basically what you're going to do is you're going to just follow all of these accounts, okay? And you're going to put them in numerical order. So cash is the first one. So we're going to put cash here. Then we're going to do accounts receivable, 106. Let's go ahead and scroll down just a bit. See if we can't get more on there. Okay. So then the next one's office supplies. And bottom line is they should all be listed here anyway. Prepaid insurance. If you put them in these numerical order, prepaid insurance. Let's just see if we can do that. Prepaid insurance, prepaid rent. Do we have prepaid rent up here? Okay, we do. Office equipment, and then we get into the liabilities. Office equipment. And then we're going to do accounts payable. All right, and then let's see what else we have. Brooks Capital and withdrawals, and then revenue and expenses. Brooks Capital, Brooks withdrawals, service revenue, and utilities expense. So you're going to list all of these accounts on here, right? Then once you've done with all these journal entries and you come over here and you've posted all of these here, you're going to have a balance in each one of these. You're going to take that balance and you're going to put it over here into the trial balance. So let's continue and work more on these. Let's go to see if this works. Yeah. All right, let's come over here. The company prepaid $6,500 cash for 6 months rent. So we're going to come over here, debit prepaid rent. And I'm not going to go through these journal entries. I want to just get these done so that I can show you guys how this translates over to the T accounts and then over to the trial balance. That's mainly what I want to show you with this. But the T accounts are very helpful, and I'm going to do it based on each one of these. So we had prepaid rent and cash on March 2nd, $6,500, March 2nd. Prepaid rent, March 2nd. I've already forgot the amount. I do that. I can remember like two things. 6,500. Okay, we're going to go 6,500 and then cash. Notice cash is the highest amount of lines available. We're not necessarily going to use them all in any of these accounts. We could, but we may not, okay? The point is for doing this is they want to know that if you're going to know this information. So they give you a lot of options. So don't be fooled all because you're not using all the options that you actually have to use them. Company made credit purchases of office equipment. Okay. I know office equipment is an asset, and what increases asset is a debit. And office supplies is also a asset. So we're going to debit that. And we're doing them both on credit. So we're going to owe suppliers. So we're going to do it to accounts payable, and that is going to be $6,000. I added the $3,600 to the $2,400. So we're going to come over here. And again, if you don't like going back and forth between here, you can just do all the journal entries and then do that way. Copy, paste, or screenshot it, put it on another thing, write them down. You come up with whatever you want. It's no big deal to me. Office equipment, office supplies, sorry, office equipment, 3,600. Office equipment, let's see, 3,600. And you better remember to put the journal entry dates in there. I think it was March 3rd, right? Yeah. And then office supplies for 2,400. If you don't put the date in here, it'll say it's not complete. So you got to make sure you do all of these things and make sure that that's the case. And then we're going to have accounts payable increase on March 3rd for $6,000. We want to credit that. All right. So we're done with that one. Okay, so I've kind of showed you the bouncing back and forth method. Let me show you now, just finishing up these journal entries, and then I'll show you another method of what we can do. Company completed service for a compliant, immediately received $5,000 cash. Okay, we received cash. It's going to go up, so we're going to debit that. It's an asset. And then we got revenue, service revenue for the same amount. Normal balance is a credit on the revenue. Okay, good. Company completed $7,600 project on credit for a client who must pay within 30 days. We completed it, which means we got revenue, but we didn't get the money. So we've got to do this to accounts receivable for the full amount of the money. And then we're going to do service revenue for $7,600. Now I'm just using my keyboard. You can use your mouse. I find using the keyboard is a lot more efficient, but you can click everywhere and type stuff in or just select whichever one. You can click this little down arrow thing and see all the little accounts there. I just find it's easy to deal with this the way it's doing. So we're going to do debit to accounts payable because we are settling the debt we got on March 3rd for both of the companies that we got the supplies and office equipment for. So we're going to debit accounts payable, reducing our liability. Normal balance on liability is a credit, so make it go down as a debit. And our asset is cash we're using, and our normal balance on an asset is a debit, but this is going down, so we're going to credit our cash. Company paid $4,900 cash for the premium on a 12-month insurance policy. Okay, so we're paying this premium on a 12-month insurance. So I'm going to say that's a prepaid insurance for $4,900. But it didn't say we used those months or that we're paying for what we've already used. And so we're going to debit the cash. Whoops. Make sure that that goes in there. Why? Thank you. This is a numeric cell. Please enter numbers only. I think something went weird on that one. Just ignore those things if they give you a bunch of garbage. Okay. Company received $5,100 cash as partial payment for the work completed on March 1st. All right, that's easy enough. We are going to debit cash. We've already completed the work. We've already booked the revenue. We're leaving revenue alone. But they owe us the money, so we're going to get rid of the accounts receivable for $5,100. And looks like it did not like me not accepting that. Okay. Next journal entry. There. Okay, the company completed work for another client for $9,190 on credit. Okay, we're going to debit our accounts receivable again. Same thing. Whenever we get work completed for someone on credit, they owe us the money. If we ever have someone do work for us and we are going to pay them later, then that's on credit as well. Brooks withdrew $6,000 cash from the company for personal use. Owners withdrawals, normal balance. Let's put withdrawals. There it is. Normal balance on the owner's withdrawals account is a debit. Okay, it's $6,000 in the debit side. That's increasing it, but remember, an increase in this equity account is going to decrease overall equity, which is why we can do it. Whoopsie, I keep doing that. Cash. All right. 2 more entries, and then I'll show you how to do this. The company purchased $2,000 of additional office supplies on credit. All right, so we're getting those office supplies again. We've already done this journal entry before. No big deal. It's on credit, so we're going to go accounts payable, 2,000. See how many extra lines are on these? Again, it's just to make sure that, you're not, that you know this stuff. So we paid $700 cash for this month's utility bill. So we're going to do utility expense for $700. And we paid it in cash. Oops, did I do it again? Cash for 700. All right. So there we go. So now what we can do is click View Journal Entry, General Journal, okay? And it's going to show us all of these. Well, we know we already did journal entries through March 3rd. So I'm just going to try and capture this, all right? And so what I'm going to do is I'm going to open up a Paint program. You can do this with Word. You can do this with Excel, I think. Trying to, but nothing's like my computer's like, nah, we don't want to do that, Brian. Not today. We're too tired. You know, let me just open up a Word document, maybe, or not. My computer is suddenly slowed up. I hope you can hear me while I'm talking. But my computer program has gotten to be a little bit slow, and I may accidentally pop up a document in front of this screen because I was working on some reports earlier. Oh, good, it didn't. Okay. I didn't want you guys to have to see that if you didn't want to, but come on, Brian. Come on, computer. Home. Oh, let's go File, New. There we go. Now this computer's working a little bit better. All right, so now I got this document over here. What I'm going to do on this screen here is I'm going to hit Alt Print Screen. It's up in the upper right corner of my keyboard. It could be somewhere else for you. What that does is it's going to take the active sheet, the active screen on your computer, and copy it. And I like to go into Paint myself, but here's a version of Word. And all you got to do is hit Control and hold that down and click V. And it's going to paste what you just copied here. So now you can see I have all these journal entries right here and available for me to look at. Yeah, it's a little hard to see, but let's just zoom in and maybe we'll be able to see it a little better, okay? There they are. So what I'm going to do here is, and I know I didn't get all of them, but now I did. So I'm going to hit Alt Print Screen again, come back to my, oops, wrong one. Come back to my document here, just click my cursor underneath it, and hit Control V again. And now I'll have both sets, all the journal entries that I need, okay? I'm going to hit the Windows key. I'm using a Windows computer, and the right arrow on the keyboard to make it to where I have it fill this. And as such, and in so doing, I can now click on whichever one I want to see on the other side. So what I'm going to do here is go now to my journal entries. This way I don't have to keep bouncing between the two journal entries, okay? It'll save me some time. Oh, it put it on top. All right, so I didn't want that, so I'll just take this, and I'm going to move it up here. Switch them up so that I can actually see them in order now. Okay, so March 6th, it looks like we had a cash. So let's go over here to March 6th. And we had a debit of cash for 5,000. I'm going to put that in there. This is what we call posting to the ledger, okay? This is the general ledger here. All of these accounts are in the general ledger. Each one of these are their own ledger account. So this is the cash ledger represented by this T account. And then we're going to go to service revenue for 5,000. I don't recommend doing what the book says and finding all the cash and then finding all the revenue and doing that. I really don't. Do it by journal entry, and that way you know you've gotten everything. Service revenue March 6th, and we're going to credit that for the same amount, 5,000. Okay, so we're done with March 6th. March 9th, we have more service revenue. So since we're here, let's just go ahead and spend our time here and add to service revenue 7,600. And then we're going to accounts receivable for the same amount. Find that. There it is. March 9th. We're debiting accounts receivable for 7,600. Perfect. Okay, now we got on, let me zoom in a little bit more so that you guys can see this better. Don't need to see all that over there. Okay, so we just did the accounts receivable there for 7,600. But now we bought something else, accounts payable 6,000 for the cash. We're paying it off, okay? So, or at least we're paying some amount. So let's come over here to cash, and on March 12th is the date. We have cash going out for $6,000. And then let's find our accounts payable. There it is. So it looks like we paid it off March 12th. We're going to debit that $6,000. See, and then it goes to zero because we no longer have any payments we owe anybody. March 19th, we have prepaid insurance. And so let's go to prepaid insurance. There it is. March 19th. We're going to debit prepaid insurance because prepaid insurance is an asset. In theory, we can get a refund or we can factor it out. We can do a lot of things with it if we need to, but or we can just use it like we intend to. So we pay in cash, so $4,900 is going out. Next thing looks like we're doing more work. We're getting more money, so we got $5,100 coming in on March 22nd. We're gonna have more revenue. Oh no, we're collecting on a debt. I'm sorry, we're collecting on a debt. March 22nd. We're going to credit our accounts receivable for $5,100. So we got some of it. March 25th, looks like we did more revenue. So we're going to go March 25th here. So they didn't pay us. Back down here, change this. Don't leave that if you made a mistake like I did, and I should have cleared it out because it would have counted it as wrong. So we didn't want that to happen. Looks like the owner withdrew some cash, $6,000. So let's find that withdrawals account. There it is on March 29th. 6,000. And then cash is going to go down 6,000 on March 29th as well. And then we have, we've gotten to the part now where we need to come down to this. All right, March 30th, office supplies. So March 30th, office supplies increases by 2,000, and our accounts payable is going to increase on March 25th, 30th, by 2,000. And then we pay cash for utilities. So let's do that on March 31st. Okay, 700, and then our utilities expense is down here. And we're debiting that for 700. Let's make sure I've credited cash. Okay, good. All right, so now we're done here. Thank you very much, Word document. We no longer require your assistance, so we're going to make this big again. All of these are completed now, so let's now go to our, first let's check our work because I didn't check it on it before. Let's do that here. Make sure that, okay, it's not complete, but it doesn't say anything's wrong. It doesn't mean that we've missed anything yet. Let's check over here too. Okay, everything is correct so far, so we can probably conclude that we're safe now to move over to the trial balance. So let's go ahead and return to the question. Now, the trial balance, all we're doing is taking these balances here. Cash, $141,000. Debit, $141,000. That's it. We're just translating this stuff over. Accounts receivable, $76.90. Debit, $76.90. Okay. And we know why it's the debit balance is because if we add our debits and subtract our credits, we're going to have a positive number, and that would be a debit here. So office supplies, we only have debit, so it's 4,400. Office supplies, see how it's in order? I said 4,400, right? Yeah. Prepaid insurance, 4,900. Okay, let's see. Prepaid rent and office equipment. Prepaid rent is 6,500. Office equipment is 33,600. Okay, if those are wrong, it's because I just forgot and messed up the numbers probably. Okay, accounts payables balance is 2,000. Oh, whoops, my fault. See, it's accounts payable, right? Accounts payable's normal balance is a credit. So we got to put this as a credit. That was my fault. Then let's go down and find out what the owner's capital was. 185,000. Withdrawals is 6,000. 185 and 6. 185,000. And then our withdrawals accounts normal balance is a debit. Now we need the revenue. Revenue is 17,790. Normal balance is a credit. And then I remembered that our utilities expense was 700, and that's a debit. Look, we balance. That's the whole point of the trial balance. We're doing a trial to see if they all still balance when we put them in our debits and credits like this. Let's check our work. I'm pretty sure we're feeling pretty good about this problem. The answer is complete and correct, okay? We're done. We finished all of our assignment. We click this submit button in the upper right corner. This is how you create a trial balance. This is how you get there. If you have any questions, please let me know. Get with me early and often on this stuff because you have to know chapters 1 through 4 like the back of your hand. It will be what you build on all of your other accounting stuff. So if you're struggling in these areas, we need to get you to where you're not. Anyway, have a good one. Thanks for being a part of this video, and we will see you in another video later on, I'm sure. Take care.